Welcome back. It's Tech Tune Up. It's May 28, 2024. I'm your host and veteran tech analyst, Paul Meeks. I'm supported here by Benzinga and also where I manage my dough for clients, Harvest Portfolio Management, easily found. So, as usual, I'm going to go through some of the key news in the sector relating to specific companies and their shares, not just to regurgitate that news, but to give you tells for those companies and other companies in the tech space. So let's get at it. Top of the list, Apple. This is kind of interesting. You know, I've poo-pooed Apple for some time because it ain't a tech company unless it's growing its top line. And this company has been flat to shrinking for about a year and a half. However, we might have our first ray of sunshine over there. Just announced not revenues, but shipments for the iPhone in the Chinese market up 52% year to year in the month of April. Now, the key is shipments, not revenue, because we also know that they've been heavily discounting to the tune of about 20% for high-end phones. So what is really going to be the sales and profitability impact? We'll see. The next are two of these meme stocks that I think, even though they're well-known short ideas, I must emphasize both GME, GameStop, and AMC, the theater chain, have had big rallies. And these were meme stock rallies. There are no businesses here. The stocks rallied even further when they both announced secondary offerings. Why are these companies taking advantage of the stock price to sell more shares? Why? Because they know at the management team in their heart of hearts, these stocks are grossly overvalued, so they want to take your money. The next is kind of interesting. PayPal was kind of a blast from the past. Years ago, there was a lot of buzz about the fintech space, the combination of the financial and technology sectors. This is a company that was spin off as a pure play from eBay, as you may recall. They've had mixed success, but I will tell you, one of the things that's interesting, they're going to use their user information and sell that data. And so that's what everybody wants to do these days. They want to sell their data to help build large language models to take advantage of the AI boom. And with that, they get licensing fees. The nice thing about a licensing fee is you don't have to sell any product. Those are 100% profit. Next in the news, as it is each and every week, is Tesla. And Tesla shareholders are soon going to have to vote on whether or not they accept Elon Musk's $48 billion pay package. Now, this was proposed by the board several years ago. It was outed in the courts, and now it's going to see if it goes through. But of course, this guy already owns a ton of the stock. Do you need to give him a $48 billion incentive package? And you know how I feel about Tesla. It's actually on my better short list than better buy list. So obviously this is just dumb. And if the shareholders approve it, I feel bad for the shareholders. And I think the board of directors are being manipulated by Musk. No surprise. One of the keys on the board of directors, Musk's own brother. That is not objective whatsoever. Next, also in the Musk wheelhouse, his AI competitor to OpenAI, called XAI, just did a $6 billion funding round that now values that company at $24 billion. Remains to be seen if this is even legit. And that's a private company, not a public company, so you can't yet short it and vote against it. But man, that seems a whopping valuation for a OpenAI Me Too. We'll see. A couple of really important quarterly earnings reports this week for tech companies that I think are tells. One is Dell. I'm looking for the momentum there in AI servers. The other one is a semiconductor called Marvell, also wrapped up in this ecosystem. Let us see what they say about their businesses and their industries going forward. The next is a Rare, at least in the last couple of years, positive earnings surprise on a quarter reported by Analog Devices. Analog Devices is one of those semiconductor companies that sells into industrial applications. We call those analog chips. They actually had a nice earnings surprise. Maybe we are back now in that slice of semiconductors where they sell to the industrial end markets, because I've been away from that group for a long time and it's been a good idea to be away. Maybe they're back. We'll see. Next is the Chinese company Alibaba. They just did a big convertible bond financing. And this company is really sad because it was Amazon and more in the really important Chinese market 4 or 5 years ago, fallen under hard times. Now they're desperate to do a financing. What they're going to do is they do the financing and then they take the proceeds and buy back their stock. Either they're really being boneheaded on that management team and that board of directors, or they think that their stock is a screaming buy. To be determined. Unfortunately, the stock has long fallen off its perch in Chinese tech. Back to Tesla again. I don't need to reiterate it. There's more news, but we have a situation where, as I've said before, we're now seeing insiders, those very people on the board of directors that are voting for Elon's grotesque $48 billion pay package. In the meantime, even though the stock is down 50 to 60% from its highs, they're selling their own shares. If that's not a tell, I don't know what is. Next, we had a pretty good report, though Wall Street didn't seem to like it much. A company called Snowflake, a data cloud provider. And here's the rub. Revenues were great. Forecasted revenues, okay. But the problem is this AI infrastructure build for everybody is hugely expensive. And it's going to dent the margins over at Snowflake. So unfortunately, it's probably a stay away, as is the next on the list, Workday, probably in the minor leagues of enterprise resource planning software. It had a nice run over the years. I think some of these companies, instead of using the AI to build a moat around their businesses to protect their franchises, AI is destroying their moat. It's filling in the moat. And Workday might be one of those companies that takes it on the chin. Next, back to China. Company is called Pinduoduo. You might know this from their Super Bowl commercial on Temu. Temu is one of those e-commerce upstarts here in the States with another company called Shein. They actually had a pretty good quarter over there. And we'll see what happens. Can these two Chinese e-commerce very aggressive competitors make a dent in our market? We'll see. Next, we have our buddies at Google. This is kind of interesting. They announced, of course, Google is a digital advertising model, right? That's how they make all their money, despite all of the talk about diversifying into other things. They make their money until further notice from digital advertising. And this is kind of interesting. Using AI tools, they are going to allow their advertisers to post 3D ads. I think it's actually going to be kind of cool. Let's see how it plays out. This is really interesting. This next one on Amazon. Everybody knows that Amazon is one of the kings of big tech. You probably have an Alexa device in your home, but here's the interesting part. You're now going to have AI capability on Alexa, your smart speaker at home, but it's not going to be part of your Prime subscription. It's usually new bells and whistles at Amazon are bundled into your Prime subscription. They are going to charge extra for this. And we'll see, when you're charged extra for AI capabilities, will you do that? Another tell. Will people be interested enough in paying extra for it? If they don't, you'll know that maybe this AI thing isn't as big a deal as it was purported to be. If they do, we'll say, okay, that's another AI use case. And the fact that they're building all this stuff may have some return on investment for all the dollars that are being spent. Next is Texas Instruments. This is interesting. This is another one of those industrial semiconductor companies. We call it an analog chips. They are being hassled by the activist investor Elliott Management, best known for the head over there, Paul Singer, taking up almost a $3 billion stake in this company to force change. Be interesting to see what happens here. Next is Qualcomm. Qualcomm is a company that had finally a good quarter, and I'm warming up on Qualcomm. I might actually now add Qualcomm to my buy list. I was really worried about the deterioration in the smartphone market, and their chips go in all these smartphones. We'll see what happens now. It looks like the most recent quarter and the guidance that management gave, very bullish. Qualcomm is now on my radar screen, probably heading to my buy list. This next is in the legal news. I actually think it's a tech story. Maybe some people don't. You may know that years ago, Live Nation and Ticketmaster merged, and now they have an absolute stranglehold monopoly on concert tickets. Take a look at the Taylor Swift fiasco from last concert tour. This merger has been challenged and threatened by the U.S. Department of Justice. It could really change how we pay for tickets for sporting events, for concerts here in the United States. And of course, the backbone is technology. And last, this is kind of an interesting idea. I always look for derivative plays in my sector, right? They may not be called tech companies, but if tech has a nice wake, they're coasting in it. Here is a natural gas company called Coterra Energy that I'm looking at very closely for my buy list. Ticker symbol is CRTA. And here is why. This company is a well-managed company focused on natural gas. And we have a voracious demand with these AI data centers for power. And the baseline power in the past was coal. Obviously, coal now prohibited. The next option, nuclear. But we can't go with nuclear during the AI infrastructure build. Nuclear facilities are too long to implement. And so we're left with nat gas. And we should probably have a nice run based on the AI infrastructure build for Coterra and other focused nat gas companies. So that's habit. And let's move on to the tech picks. We don't have to dwell on a lot of stuff here. These are my stocks that I either hold or I think are fresh money buys. The holds or caution are in yellow. I'm more bullish on the greens. CrowdStrike, my favorite pick in cybersecurity software, but I'm worried about what they potentially might say when they report their results on June 4. So you don't have to wait very long for that. Let's hold off. Micron, my favorite pick. Everybody knows it. It's already been one of the best performing stocks in the 503 stocks that make up the S&P 500 year to date. T-Mobile's in the news today. They're going to spend over $4 billion to either acquire all of U.S. Cellular or part of it. They might do a share with Verizon. I don't think this is a big deal. U.S. Cellular is pretty small. I don't know if the government is going to allow this deal to go through anyway. This is kind of neither a here nor there for me. T-Mobile I'm holding it. If you hold it, I'm not buying it fresh. Take a look at these other real focused AI infrastructure plays. Microsoft, Meta, Amazon, though I'm looking to see if when they charge you for AI Alexa, if you're actually going to pay. Synopsys, NVDA. Broadcom I like. Broadcom I probably would buy today, even though it's indicated yellow here. Dell is reporting on Thursday. Big report. Taiwan Semi, Google, Booking.com, my favorite stock or among my favorite stocks with Amazon in the consumer discretionary sector. Marvell, just like Dell, reports on Thursday. Stay tuned. I like my data networking AI infrastructure to the stars build-out company, Arista Networks, ANET. I still like Supermicro. Three of the stocks that I've been harping on ever since we started this show are among the best performers in the S&P 500. So staying tuned to Tech Tune Up with Paul Meeks has been very, very, very good, at least thus far. And then I have Coterra, which I'm looking at again as a nat gas play, as a derivative way to embrace AI infrastructure build. So with that, let's finish up with some tech themes. I continue to be focused on interest rates. I use the CMA Fed Watch tool. I'm telling you, with more and more inflation data coming in that's still too sticky high, I think there is a very good shot that we don't lower interest rates at all in 2024. This might be a 2025 phenomenon. At the beginning of 2024, the conventional wisdom was that the Federal Reserve Board, our central bank, would lower rates 5, 6, 7 times. Inflation has been too high since then, and it looks like they may not act at all. And I'm a little bit worried that people still think cuts are coming this year and they're boosting stock prices based on it. I hope there's not any disappointment, because there could be. This is an interesting tell. The Fed has 12 banks spread across the United States. One of those banks is in Minneapolis, and the head of that bank is a guy by the name of Neil Kashkari. He's one of the more flamboyant, bigger talkers among the Fed bank presidents. But he said just this morning in an interview that he needs to see, quote unquote, many more months of inflation subdued before he wants to lower rates. You're not going to see many more months, at least in the rest of 2024. So I thought his comments, even though he is not a voting member on the Fed Open Market Committee, which actually sets rates, the fact that he says this so aggressively in public ain't a good sign. I tell you, one thing that's going to be huge is this Friday, the Fed's most important inflation gauge, called the core PCE. PCE stands for Personal Consumption Expenditures, is released for last month. We need to see progress there, i.e. this gauge going down, for the Fed to feel more comfortable that they have tamed the inflation beast to lower rates. Big news coming Friday. I'll report on it next week. This is kind of interesting. A poll was taken by CFOs. And these are CFOs that have commissioned AI projects. But this is really interesting. 95% of these projects are just tests. Only 5% are being deployed, implemented. Again, we do not know, after all this AI infrastructure building, if there will be follow-on business. We need more use cases. Next, this is kind of interesting. We got to be worried about our attack on our water system. Some studies were done recently that over 70% of our water network is not protected against cybersecurity. And that would be a real area for the bad guys to threaten. Maybe I shouldn't even said it on air, but it is worrisome to me. I'm warming up on the semiconductor capital equipment companies. And you'll probably see some of these coming soon to the Meeks buy list. Here are the leaders in this space. You could probably just buy all the leaders. You have Applied Materials, ticker symbol AMAT. You have ASML, ASM Holdings, which is a Netherlands-based company, but it trades in the States. You have Lam Research, LRCX. You have KLA Tencor, ticker symbol KLAC. And last, you have the Japanese company, Tokyo Electron, but it trades in the States as a OTC or pink sheet stock. So maybe not enough volume there, but Tokyo Electron should be at least on the who's who of global semiconductor capital equipment companies. I mentioned the use cases. A year ago, Microsoft started offering for an extra fee Copilot as part of their Windows Office package. Here we are a year later. They're not talking about Copilot. So I don't think people paid that extra fee for access. That is a potential AI use case that didn't pan out, or it hasn't panned out just yet. And then I announced today that Amazon is going to put AI on Alexa, but they're going to charge you more. It's not going to be in the typical Prime subscription Amazon bundle. And so we'll see. Here's another chance for people to say, I really want AI. It's a good use case. I will pay for it. It's going to be profitable to those vendors. Wow. If we don't see take up here, another problem with lack of AI use cases. And then this last trend is super interesting. We know that AI has a voracious demand for power. And that's part of my Coterra theme today, right? The nat gas. Take a look at this chart that's published by Goldman Sachs. Goes from 2015 through last year. Take a look at the workload demand for US data centers. It is explosive. It is hockey stick up and right to the good. It is southwest to aggressively northeast. This is why we are interested in not just the obvious AI infrastructure builders, but some of these derivative plays that should benefit just as much from the building out of these data centers. And if we were to stretch this chart here from Goldman to the forecast for 2024, 2025, 2026, you would actually see even accelerating growth from this already lofty level. So I just thought this was a cool graph to share today. So anyway, that's Tech Trends. I will see you next week. I'm Paul Meeks, sponsored by Benzinga and Harvard Portfolio Management. Look forward to checking in with you again. Thank you.